High returns, lower rates, and a resilient U.S. economy were the right combination for investors in the third quarter. That's according to our next guest, who also highlights that the highest returns mostly went to small caps. For more on this, we're going to bring in Francis Gannon, Co-Chief Investment Officer at Royce Investment Partners. It's good to have you join us. Thanks for taking the time.
Thank you for having me.
So why do you think the smallest stocks were seeing the highest returns?
Well, they got hit pretty hard, right, going into the lows of early April there and had a wonderful rebound really through the end of the third quarter. But I think the story for small caps is just beginning. I think there's a fundamental story behind small caps that investors are missing today that we think will go, for the next several years. Obviously, they've underperformed for a long period of time. But they have an earnings cycle now that I think is going to be pretty strong that will surprise people. And I think in a world where everybody wants to own the same type of stocks, where you see enormous concentration in the indexes to the upper end, to the Magnificent Seven, et cetera, you're going to should start seeing a broadening of the overall market, especially from an earnings perspective. And that will help the small cap story, I think, really outperform for a period of time here.
So more room to grow, you think. You say small cap returns were kind of broad based. Was there any particular sectors for small caps that did really well that you noticed?
Well, one of the areas that we've been focusing on as a firm has been industrials. Industrials is a kind of a catch-all, if you will, within the small cap world. Includes everything from machinery businesses to service companies. But I think what you're seeing is this reshoring trend within the small cap market. So as you hear about more and more companies building plants here in the United States, small cap companies in the industrial area are really able to take advantage of that. And so you saw them do incredibly well in the third quarter. And I think that's a trend, again, that should continue going forward here, especially from an earnings perspective.
Information technology, healthcare, those sectors also doing pretty well, I think.
They did. They definitely did. One of the things you've seen is healthcare do well within small caps. Healthcare tends to be a lot of non-earning companies, especially found in the biotechnology area. Obviously, with rates being lowered during the third quarter, that really helped some of the non-earning areas of the market. So you saw the kind of the lower quality companies do quite well within healthcare. And then in technology, obviously, the story continues to be AI in all its different forms, even in our space.
Okay, so you were talking about the fact that you feel small caps have a lot of room to grow, like investors shouldn't be ignoring small caps. When you're looking at the Russell 2000 as a percentage of the Russell 3000, what are you seeing now compared to past years dating back to like the 80s in terms of a percentage standpoint?
Sure. It's one of my favorite statistics, and it kind of just goes to show how out of favor small caps are right now. I've referred to small caps as kind of the forgotten asset class in many respects, but here's an asset class that has returned 15% annualized over the past 3 years at the end of the third quarter. And then if you look at the Russell 2000 as a percentage of the Russell 3000, at the end of the third quarter, it was at 4.4%, one of the lowest numbers you've seen. You actually have to go back to the beginning of the indices to see it being represented so small in terms of that percentage. And so the history would take you back to about 8% on average. And there are moments in time where it's actually above that average, closer to 10%. So to me, it just, even with the move that we've seen off the lows of April, to still see that percentage being so low just represents further opportunity in a world where people have all but forgotten about the asset class.
When you're looking at U.S. small caps compared to other countries, like should investors be focusing on North American small caps, or do you think there's room to grow like internationally as well?
Well, I think the opportunity set is domestically as well as internationally. Obviously, the economies outside of the United States are doing better of late. You've seen, especially in Europe, some excitement. You've seen the markets in Japan doing better. So I think the opportunity set is really on a global basis. And so for you to see, the opportunity set is that, I think from my standpoint, is that the market seems to focus on the fact that there's only innovation in the upper end of the S&P 500 or the upper end of the markets from a market cap perspective, anywhere from a global perspective. And in fact, there's an enormous amount of innovation taking place in a lot of these smaller companies that have just been forgotten and left behind as the markets have advanced over the past several years.
Well, let's talk about some of these smaller companies. So a couple of your picks when it comes to small caps. The first one, Aon, AAON. Do you want to tell our viewers a little bit more about that?
Sure. A lot of what we've talk about in today's world is AI and its benefits, and I do believe AI is going to come to a small cap company near you. We're going to see increased productivity, and obviously that'll flow to the bottom line. But Aon Corporation is a great Aon is just a great business that is involved in HVAC. And in a world that is getting more and more highly regulated in terms of air conditioning and cooling, this is a company that really benefits from the AI trend. The stacks of chips used in data centers generates about 8 to 10 times more heat, and therefore they require more cooling. And Aon is a company that's really going to be benefiting from that. So it's an area of the market that we've been focusing on within technology, is finding businesses that really benefit from the AI trend without actually having to pay the multiples that you pay in the upper end of the market today.
And sticking with AI, your next pick is, I'm not sure if I'm saying this right, HCKT.
Yeah, Hackett
Oh, Hackett.
Group.
Okay.
Hackett is a Miami-based company. It's about 500 or 600 million in terms of market capitalization, so on the very smaller end. But it is a company that is involved in IT services, and they're using a lot of their benchmark data that they've had for a long period of time, and actually starting to create a tool that helps companies roll out AI in terms of their overall workflows. And I think it's a really interesting part of the market right now, as companies learn to exploit what they currently have and roll that out to other customers from an AI perspective.
Okay, interesting stuff. Mr. Gannon, appreciate your time today. Thanks so much for joining us.
Thanks for having me, Lindsay. Have a great day.
You too. That's Francis Gannon, Co-Chief Investment Officer at Royce Investment Partners.